Hello, everyone, and welcome. Here today, I'm joined by Michael Rogers, the head of compliance over at Canadian based cryptocurrency trading platform Netcoins, to talk all about cryptocurrency and the future of its regulatory landscape. So, Michael, thank you so much for coming on.
Thanks for having me.
So, I was wondering if we could start about why you see regulation as crucial in the crypto industry.
Yeah, for sure. So crypto, it's in its infancy, right? It's had its share of good people using it. It's had its share of bad people using it, and people using it for good means and bad means. Regulation is going to make it more mainstream, where people can use it, trust it as a currency, and use it for what it was intended to be for. Where in the past, I think it was viewed as something that a lot of bad people would have used, or a lot of criminals would have used, and that's the reason why it's never become as mainstream as it could be.
Interesting. So, how do you see regulation as means of protecting investors, let's say, or even market integrity?
Very much like how securities regulation. So securities regulation, meaning what IROC or the MFDA would do in Canada and the SEC would do in the US, overseeing the securities market, the stock market, the mutual funds, and those sorts of things. Regulation is going overseeing crypto is going to make sure that the firms that are offering those products are acting appropriately and with integrity and with the client's best intentions in mind, which is just going to bring a lot of integrity to the industry and confidence to the consumer.
Interesting. And especially with recent incidents, especially with the collapse of FTX in the past year or
Right.
so, I was wondering if you could
Yep.
give your perspective on the associated regulatory challenges that they may have faced, certain missteps that you could
Last
potentially,
year's been tough.
yeah.
Yeah, 2022 was a tough year. It was FTX, especially in November, took everybody by surprise. They were one of the world's biggest exchanges. They were everybody's favorite for a while, it seemed. And then it turns out that they were doing a lot of things that were completely illegal. Commingling funds was the main thing. So using client funds to do everything from fund salaries to purchase vacation homes in the Bahamas to make purchase in bad investments, such as Alameda, which was their, I guess it was their investment fund, is what they called it, something like that, where they would invest in a whole bunch of different altcoins, some that worked and some that didn't. We don't do. I mean, we definitely don't commingle funds. We're regulated in Canada. We've told our regulators and we've worked with the regulators and made absolutely sure that all client funds are separate from company funds. So that's something that we really focus on. We don't want to be in that position ever, and we absolutely make sure that we're never commingling funds. That The other thing is they operate in the Bahamas, and the Bahamas is a lovely place to visit. I love the Bahamas, but they don't have the regulation that they have here in Canada. Here in Canada, we are registered as a restricted dealer across every province, and there is a strict set of rules that we have to follow. We have to follow securities laws and Securities Act that apply in Canada. They're just not as strict in other areas of the world.
Interesting. So not only were they not following regulatory guidelines, but they were also doing shady things behind the scenes that, a lot of companies like Netcoins don't allow, but they were doing it. So
Yeah. Yeah, correct. Yeah, we don't use client funds to buy boats.
that's good to hear. Now, moving on to account appropriateness, I was wondering if you could talk a little bit about that term and especially what it means in the context of crypto trading in Canada.
Yeah, it's something that not every country has, but in Canada, because crypto is regulated under by securities commissions, um, in securities law. So if you're opening an account at a bank or with an investment dealer, broker, mutual fund dealer, the first thing you always do is you do a know your client form, which is you go through and okay, where do you work? What's your age? What's your family situation? That kind of thing. That information is gathered in making sure that what investments are appropriate for the individual, um, and what may not be.
Mhm.
As a registered crypto exchange, we have the same obligation. So we collect that information when an individual first signs on. They things like income, uh, risk tolerance, that kind of thing, where a determination is made if crypto is okay or appropriate for that individual, or if how much of it is appropriate. There is crypto in regulators' views is higher risk than a regular investment. It's definitely more volatile. I don't think anyone will argue with that. It's more volatile than an index fund or something along those lines, where crypto can go up and down 20% in one day, depending on what you're buying. Right,
Yeah.
that's what a lot of people like about it. But as a registered dealer, we do have an obligation to look at appropriateness and make sure that it's appropriate for the individual. An example of someone that it may not be appropriate for is someone that claims they're unemployed. They're using maybe their unemployment check to invest in crypto. That's just, it's not the best idea. It could work out, but it may not, right? That would be an example of someone that would fill out that information, and we would say, there's better stuff for this guy or girl.
Yeah, makes sense. So it's not just as simple as creating an account. There's actually a lot of behind the scenes work that goes on to ensure that investors' funds are safe and that they're, obviously qualified to be investing in crypto. That's
Correct.
that's
Yeah.
interesting. So I guess on the topic of KYC, I'm assuming it does relate to account appropriateness, as you just said. Could you speak a little bit more about why it's so important and maybe certain players that sort of evade it? Some stories have come out recently of that.
Yeah, particularly not in Canada, right? The ones in Canada, from what I know, the ones that are regulated anyway, do follow those rules. They have to. The ones that may be based in other areas of the world, particularly over on the other side, Asia, they don't necessarily have the same rules. So, without naming names, there have been some in Canada that probably don't collect that information and don't treat it the same way that we would.
Interesting. And I just a quick question, sort of leading on from that. Why is it that they're able to operate in Canada if they aren't regulated and are based in Asia?
Well, these are changes that are going to happen. So, crypto regulation only came into it only became uh, even an option to register as a securities dealer in 2021 in Canada. I'm sorry, as a crypto dealer. So it's 2 years in. There's companies that operated here well before that. Canada has said any company that's going to sell to Canadians has to register with us. So either the companies that are operating here are doing so or they're leaving. And there have been some that are leaving.
Interesting. So what are some of the challenges involved in creating that sort of robust KYC process that I'm assuming you've worked on creating for Netcoins?
Yeah. We want to make our process from a business standpoint as simple as possible. From a regulatory standpoint, it's tough because regulators would want 25 questions before you open an account, where consumers probably only want two. um, so where do you find that fine balance? There's always a balance between what the consumer, what we believe the consumer would want, and then meeting our regulatory obligations. And sometimes finding the balance of being compliant and being a good operating business is a challenge.
Interesting. Now, moving on to sort of some of the regulatory differences that you see from country to country. Netcoins recently expanded into the US, obviously based in Canada. But
Yeah.
how do you see the regulatory environment in the US? Is it different than that of Canada?
Principles are the same, but regulation in the US, the SEC doesn't have a specific category yet for crypto, whereas Canada does. They're called restricted dealers here. That's what crypto dealers can register at. The SEC doesn't have an applicable category. Um, Things are nasty in the US. As I'm sure you've heard, there's been um, lawsuits between the SEC and two big firms, without naming them. And that's not the kind of thing you see here in Canada, but that is the difference of operating in the two different countries. Is lawsuits. Um, the U.S. is more common with lawsuits than Canada is, and that's definitely a difference in operating between the two. But the principles of regulation, I think, are going to be very much the same in 2 years. I'd say 2, 3 years.
Interesting.
Once the SEC kind of catches up to where we are in Canada, we are more ahead in Canada with regulation.
Hmm. So a lot more challenges sort of in the States, expanding even communication wise with the regulators. It's a bit of a bigger challenge, correct?
It's a bigger challenge, and the other challenge is here we're 10 provinces, so you deal with 10 different entities. There's 50,
Yeah.
so
Yeah.
um, yeah, you have to deal with 50 different states, where here you deal with 10.
Yeah, a lot more. Now, looking into the future of crypto regulation, how do you see the regulatory landscapes in the US and Canada? How do you see them evolving over the next few years? You touched on it briefly, but
Yeah, so here, like I mentioned, in Canada, there's firms that have left, which is not unexpected, that had been operating here. Once the rules were set in place, they said, "I'm leaving." And in the US, I would expect the same will happen. And we have seen that with one major firm in the US. And then I think that others will follow suit. The the SEC and the US will have to create some sort of category. They'll have to create some sort of means for uh, crypto platforms to register themselves, and I think that's the way they'll want to go. Is even whether crypto is actually securities is a debate for another time for sure. But I believe that crypto will fall under SEC, which also regulates um, the entire securities market in the US.
interesting. So some turbulence over the next few years as these things sort of settle. And then
Yep.
once the regulation sort of comes into place, that's when things can start to grow, I guess, in a healthy way, correct?
Hope so.
Hope
Yeah.
so.
There's a lot of growing pains in our industry for sure,
Yeah.
and we've definitely seen it over the past year with the collapse of things. But I also believe that that's our industry growing up. Right, the collapse of Celsius, collapse of FTX is just simply the players that shouldn't be there are being weeded out, and it's unfortunate for the people that had accounts there and were victimized by that. Um, but on a grander scale, I think it's just our industry growing.
Yes, that makes sense. Now, if you could send a message to the audience as the head of compliance at Netcoins about the importance of regulation and specifically Netcoins' commitment to it, what would that message be?
Um, from a consumer perspective, sometimes you may get frustrated with compliance. Why do I have to answer 17 questions when I open my account? Why do I get a phone call about certain things? And I think it's important for consumers to know that we do have regulatory obligations to meet with our clients. We do have to safeguard clients. That is part of what we do. That's part of our obligation as a firm to be compliance first, not only to meet our regulatory obligations, but to make sure that our clients are safe. We do catch a lot of um, say transactions that are would be fraudulent that we stop, and I'm pretty proud of that. I think we do much better than other exchanges in terms of someone may be sending to a fraud site or that kind of thing, and there is a lot of that in our industry. Based on our processes, based on our phone calls and those sorts of things, we stop a lot of that, and we save a lot of our clients a lot of money, even though that may be um, seem invasive or annoying at the time. The processes are there for a reason. They are there to protect our clients at the end of the day. So, um, for anyone that gets annoyed with our processes, one, we have regulatory obligations that we have to meet, and two, we're just trying to protect our clients the best we can.
Yeah, makes sense. Well, Michael, thank you so much for coming on to the show today. Definitely a lot to think about regulation wise, especially with FTX. Some of the things we've learned along the way, and it's glad to hear that Netcoins is staying ahead of the curve and treating it as a top priority. So, thank you so much, Michael, for coming on, and looking forward to the next one.
Thanks for having me.